This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices were up more than $3 a barrel in Asian trade on Monday as military clashes between Israel and the Palestinian Islamist group Hamas deepened political uncertainty across the Middle East and raised concerns about supplies. Brent crude rose $3.10, or 3.67%, to $87.68 a barrel by 0400 GMT, while U.S. West Texas Intermediate crude was at $86.05 a barrel, up $3.26, or 3.94%. Both benchmarks had jumped more than $4 a barrel earlier, before easing slightly. Increasing geopolitical risk in the Middle East should support oil prices. Higher volatility can be expected, analysts from ANZ Bank said in a client note.
China has issued a fourth batch of 2023 crude oil import quotas, raising the volume for the year to 203.64 million metric tons, three refinery sources with direct knowledge of the issue said on Saturday. That is up 14% from last year's 179 million tons. 14 companies, mostly independent refiners, are receiving 9.54 million tons in the latest quota allotment, the sources said. China's independent refiners have made extensive purchases of discounted shipments from Russia, Iran and Venezuela that allowed them to raise refinery throughput and facilitated the country's higher exports of diesel and gasoline to capture robust export margins.
Moving on to the top news in the energy sector.
Crude oil prices spiked higher in the wake of a massive Hamas attack on Israel, but the relatively modest increase masks the risk of an escalating Middle East conflict. Global benchmark Brent crude futures jumped as much as 4.1% in early Asian trade on Monday, reaching a high of $88.15 a barrel, up from the close of $84.58 on October 6. The early price action in the wake of the weekend attacks launched by Hamas militants from the Gaza stronghold against southern Israel is likely a reflection that the violence holds little immediate threat of interrupting global oil supplies.
Bahrain, Iraq, Kuwait, Oman, Saudi Arabia and the United Arab Emirates reaffirmed their commitment to collective and individual voluntary adjustments to oil production, the Saudi state news agency said on Sunday. The oil ministers of the six countries met on the sidelines of the UN MENA Climate Week event in Riyadh on Sunday. Furthermore, the ministers reiterated the willingness of the Declaration of Cooperation, DOC, countries to take additional measures at any time in their continued efforts to support market stability, building on the strong cohesion of the OPEC+, Saudi state news agency SPA said. Next, we have the top news in metal markets. Leaders of the European Union and the US are seeking to announce an interim agreement at an October 20 summit on steel and aluminium trade that would avert the re-imposition of Trump-era tariffs on transatlantic commerce, Bloomberg News reported on Friday. White House and European Commission officials are negotiating a provisional political agreement that would cover the two main planks of the global arrangement for sustainable steel and aluminum that the EU and US have been negotiating since 2021, which include tackling non-market excess capacity and carbon emissions, the report said, citing people familiar with the talks.
Copper prices rose on Monday with support from robust demand in top consumer China despite a firmer US dollar amid violence in the Middle East. 3-month copper on the London Metal Exchange was up 1.2% at $8,139 per metric ton by 0634 GMT after losing 2.7% in the prior week. Demand for copper and aluminium in China has been surprisingly robust despite the country's property sector crisis, driven by orders from the home appliance, electric vehicle, solar and wind sectors.
We will now look at the top news in the agricultural sector.
China's most active hog futures closed down 4% on Monday, the biggest decline in 6 weeks, as excess supply offset any boost to consumption from last week's holiday. Hog prices in the world's top pork market normally rise ahead of holidays but instead fell ahead of the week-long holiday that started on September 29. Cash hog prices dropped from 16 yuan and 48 fen per kilogram on September 24 to 15 yuan and 66 fen on October 8, said analysts at Huachuang Securities in a note.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.